There we go. Coming into focus.
There you are. It's like a dramatic entrance.
It is.
Eh?
I
The
like it.
dramatic entrance.
It really is. It's how we doing over there?
Yeah, good. Yeah, Friday.
Yes.
I got to coach hockey after this, so we're on a tight schedule. So no yammering on about
Yield curve control.
controls. Yeah, yield curve control. So I'm gonna put you on a short leash as far as that's concerned. But other than that, we're late getting started, so let's just jump right into it.
Okay, sounds good.
Welcome everybody. You may notice new background. Got out of the 1984 basement into the green screen Zoom background. Welcome. Okay, so it's been a crazy week, but let's just start like we always do with a bit of housekeeping.
Mm-hmm.
Tax season is what we just finished up our RSPs, so I think we got everybody in under the wire, so that's good news. But now we're on to tax season. So we may have mentioned this before, but most of your stuff will be coming from CIBC. So you should be expecting to get a tax package in the mail. Most, I would say, Ben, would you say most people have already received it from CIBC?
I already received it or receiving it this week. Had to go out at the end of February, so I know I've talked to I talked to CIBC a couple of times, and they said most of the packages have gone out.
Okay, great.
Yep.
We cannot help you with the CIBC side of it for obvious reasons. So if you're waiting, you can try to see if you still have online access. If you don't, you'll have to give a call over there, right?
Yep. So again, if there's something fund related, one of the things I think that's new in the last couple of years is everything gets uploaded to the CRA website. So when your accountant goes in to pull down like your T5008, which is the gain loss information, like all that stuff's pre-populated. So it is in there. But if you want to verify those numbers, if the accountant wants to, you want me to, certainly we can talk about gains and losses. I can go through that with you. But if it's a T-slip, then a T5 or T3, something like that, then yeah, that's got to come from CIBC. But a lot of that stuff's already with the CRA logged in there.
Right.
Yeah.
And as far as National Bank is concerned, you can log in and see. You can actually download all your tax slips from there.
Yep.
And then they'll also will they also mail everybody as well?
No.
No, they won't. Yeah.
No. So if you have selected for online, that's all going to be online. Again, if you have any issues finding it in the online portal, we can help you. It's in the documents tab. You just drop down the documents tab. So one of the options in there is tax information, I believe is what it says. So we can see it there, and so can you.
Yeah. And yeah, if you can't find it or figure out how to do it, or you just want us to, we could also download it and email to them. Is that a possibility? Yeah.
Yep.
So also a possibility to do that too. So just let us know. So we got a few weeks left of that, I guess, tax season.
Yep.
All right. Well, let's get into the fun stuff. Oh, before we do that, just a couple things. If you want to ask a question, as usual, you can put it in the Q&A, which is down at the bottom. I know kind of the bar disappears unless you hover over it. So just there's a few different options. You can put it in the chat. I monitor the chat throughout. You can put it in the Q&A section, or you can raise a hand if you actually want to talk and have an audio question. And we'll kind of fit those in where we can. Okay, let's get going on this crazy day that we had today. Well, really crazy week.
Yeah, it has been.
A lot to talk about. So tell us, you've been on the front lines of it all, so tell us what you've seen.
Well, it's a big week, lots of news with, we had Jay Powell speaking this week, and so it seemed the market was waiting for that. You had kind of going into the end of last month, you had, hedge funds and institutions kind of bringing down, like selling down their positions. So you had pressure into the end of last week. Had a rally on Monday. Then Powell spoke on Wednesday. The market kind of freaked out for a couple of days. Yesterday was quite a bit of selling as well. And that really, I think, flowed through until this morning. And we had a pretty nasty open, but by about 11:30, you had the market start to come back with volume. And so it's the first time that I've seen that volume kick in around 11:30. And stocks, I've been buying these SPACs, which I've mentioned a few times: CLA, EXPC, EOSE. These things were down today 20%. You had 20% intraday swings. So some of the additions that I made, like to CLA, for example, was 20% lower. It closed 20% up on the day, or 20% off their lows for the day. So it was some violent swings, and I think that was, I know we talked a little bit offline. You get when hedge funds get overextended, their managing partner says, reduce your exposure. I don't care what you do, sell it. And you had just kind of massive panic selling from, I'd say, institutional money and likely some retail too, but definitely panic selling. And then at some point you got huge, deep oversold, and the buying started. So that's real positive.
Right. So we talked a little bit about this on the podcast this week, but why do you think people panic like that? I mean, it's, these big institutional investors, I mean, they've been through it all. You think that why do you think to press the panic button?
Well, they press the panic button because they're levered, right? So all these hedge funds are levered 10, 20, 30 to 1. So when you're levered to that scale, you can only take on so much risk. So obviously, as selling ensues, your leverage goes down. You got to bring your gross exposure down, and you're forced to de-risk the portfolio in the time where you don't want to. But because all these hedge funds run levered, when the trades turn against them, they get in a position where they have to reduce risk. And so, sometimes, right, your shorts are going to offset your longs and you're going to be okay. But we had everything down. So it wasn't
Right.
like you get some protection from your short book. Like you had everything kind of moving down around the same levels, and that worked against them, and they're forced to reduce their risk at a time when you don't necessarily want to.
Right. So what do you do as an investment advisor in times like this? I mean, you obviously know enough not to press the panic button, but they're buying, are you selling? What's happening in situations like this?
Yeah, so I've actually had a couple of questions this week too about, the activity. Sometimes it looks like you'll go in and make a sell and you'd only bought it recently. And so this was a week of a lot of that, was just looking at what positioning in the portfolio and saying, do I still think this is the right place to be? And maybe even taking a switch where maybe I bought it a few days earlier, but then I want to look to switch into something else because I think there's a better risk reward. So I did some of that this week. And today, when this, even though you come into the session with the view that if this is down, we're going to do this, and you got to execute on that because it doesn't feel good to do that,
Yeah,
right?
right.
When you look
Yeah,
at it and the screen is just like everything's red, market's down, trend is going down, you have to have your plan going into the day and execute, as I say. Like those are buys like CLA, EXPC, EOS, what else? Yeah, like those ones for sure were things that I all bought today. Those were all SPACs where there was a big overreaction, and you got to buy it knowing that you're comfortable with where it is. BSPE was the other SPAC. Like these things trading below $10, and you're guaranteed. I think I bought it at $9.85 today. You're guaranteed to get $10. Like you can't get less than that back. I mean,
mhm,
so some of these things are easy from the perspective that you can take some comfort doing it, but you still got to pull the trigger.
right, right.
Yeah,
Makes sense.
yeah.
I mean, right along those lines too. I mean, in the news, the Nasdaq went negative for the year. you want to mention that? You want to talk a little bit about that?
Sure. Yeah, it was. We've had a looks like a bit of a shift here, and you've had some of the sectors and areas start to outperform, and Nasdaq is starting to underperform. You had Tesla down pretty hard. I think it went below 600. So there's a lot of selling going on there. And so that's putting a lot of pressure on the indices. So you're looking at this. This is typically where I've talked before. This is the quad two, right? Which is growth plus inflation. One of the historically one of the best asset classes is technology. But there's a signal this week that says either we're starting to transition into a different regime, like a different economic inflation mix, or it's just not working as well this time. So you need to look and pivot and say, okay, well, maybe I don't want that tech exposure. Maybe I want commodities. Maybe I want to be in Russia or India. Like maybe I want to have exposure somewhere else. And so, you know, it's important to watch and pay attention to. Is this a regime shift, or is this just the fact that because tech had a good run already into this phase, that we need to look at other areas that underperformed, with say commodities being one of those.
Right. So why is that significant news though that Nasdaq is negative for the year? Like why is that significant?
It's been the leader for 5 years. So,
Mm,
it's the Dow and the S&P have been laggards. And so, the growth in this in that index has been driven all by this tech revolution. Also, we've had the last 12 months of this stay at home, and maybe we're starting to transition out of that. And so maybe you start to get those some of those more cyclical names like the airlines and the cruise lines that will start to do well. You probably saw in my chart today that I sent out. It showed kind of the herd immunity likelihood for the U.S. They're probably going to be close to herd immunity relatively soon versus the rest of the world. It's going to take a long time. So, maybe you're shifting away from some of those high flying tech names, the Zooms, some of those type of tech names into maybe like as I say, the airlines, the theme parks, and those things start to open up, and that revenue starts to be driven there. So, they're early signals to pay attention to, but I would say that the likelihood that you have a huge breakout again in the Nasdaq in the short term isn't very high.
right.
Yeah.
Well, like everything else, since we're the number one news source for crypto around here these days, it's surprisingly kind of matched the market and its behavior this week, right? Down initially and then kind of rallied today. So why don't you talk a little bit about the crypto, the Bitcoin?
Yeah.
Ethereum?
Again, actually hung in a little bit better than some of the areas. We had a day on Wednesday where Nasdaq was down, and you had Ethereum actually close up that day, which is not Bitcoin, but another crypto. So you're starting to see some nuances that are saying, maybe it isn't that tech risk asset that a lot of people say it is. So it definitely is something to pay attention to, but it really behaved quite a bit better than I expected, given the volatility that we saw in the market this week.
Yeah.
Yeah.
Right.
So obviously we talked in a bit more detail about some of the potential opportunities in Bitcoin on the podcast, which you can have a look at later. But we talked about some of the kind of the future ideas that I think could play out of it, with like crypto treasury being one of them.
Yeah, absolutely.
Yeah.
So what's the week ahead looking like?
Yeah, so I guess just comment on one more thing before we
Oh
jump
yeah,
onto
sorry.
that. But
Yeah,
yeah, no, just the kind of the deals. Been given an update on what kind of
yeah.
deals have been coming out, and so it's a bit quieter week. But we had energy, Tamarack Energy raise money today, and into a tough market, it still opened up about 5%. That's pretty rare. So seems like a lot of demand for these kind of mid cap, small cap energy names. We had some bond issuance in Canada. We had JP Morgan raise some money in Canadian dollars. we had Quebec again raise money, so they're doing that fairly actively. And we had TransCanada do a 60-year bond issue at 420 coupon. So you're starting to see some of these corporations being able to raise capital pretty easily, and looking at 60-year paper, and there was a lot of demand for it. Yeah.
So
What now?
what now?
Yeah, I mean, I think that yeah, good close to the week. Seems like you get the volume coming back, and my expectation is it's a lot of these things that I've bought should do quite well. The other thing, which I didn't talk about today yet, is the yields. U.S. 10 years kind of hit that 163 this morning and kind of have peeled back from it. So that'll continue to be an important thing to watch. But the bond market typically signals what's ahead. And so I continue to watch that. I still think we're in for a couple more months of healthy markets. And I think we see still a higher high and a higher all-time high on the S&P. So all the changes have been to position for the fact that I think the equity markets are going higher.
Right. So you think you can continue to buy into next week then?
Potentially, yeah. So, some of the things that I bought today, if they do get a nice rally, I may trim some of the position there, because they've had some big moves even from where I entered them. But yeah, I would say I continue to be optimistic that the market was underweight coming into Friday, and you see a lot of buying into the close, and a solid close like this, I'd expect this continues on.
Well, that's great. So does anybody have any questions for today? Let's see here.
Anybody?
Raise a hand, put a chat, put a Q&A. Ben, do you have any questions?
No, I don't think so. I mean, I think that I know I've talked in a ton of detail about the US 10-year, and I still think it's going to be a super important thing to watch, about the possibility of when this is changing to that other backdrop, which I think is later this summer, which is the inverse of what we're seeing right now, which is slowing inflation, slowing growth. And the only thing you want to own in that period is bonds, US dollars, gold. So a lot of the things that we own right now, a lot of things we own right now will be switches and sells on the other side of this move. So continue to look at that every day. Pay attention to it.
Awesome. All right.
I think she likes your suit.
Yeah, nice. I'm trying. I got the Easter tie on. I'm not sure why, but
Yeah.
good. Okay, do you have anything else you want to talk about today, Ben?
I don't think so. I think that's good. I think that was good.
Wrap up,
Wrap up. Good summary of what happened this week. It's if you'd started the day and then only looked at the close, you would have felt like nothing happened. But you had a huge drawdown today, followed by a big rally, and so it was quite a lot to pay attention to from a market perspective.
Awesome. Yeah, and if you were hoping that Ben was going to talk about the yield curve control today, sorry to disappoint you, but that's also covered in this week's podcast, which should release on Sunday.
Yes.
So, and it's going to be a bit of a new look podcast. We're adding some things to it, so and we go a little bit deeper on everything. So that'll launch on YouTube Sunday night. You probably get an email from Ben either Sunday or Monday for that as well. Okay, well that's it. I'm off to coach hockey. What are you doing?
I'm gonna probably make some dinner.
Oh, nice.
Make some dinner. You want to come over?
Man, jack of all trades. I got to get to the rink, man. I got to coach 10-year-olds tonight.
Have fun. Have fun.
All right. Have a good weekend, everybody, and we'll
Thanks, everybody.
talk to you next week. Thanks.
All right.
Bye now.
Okay. Bye.